it all to you. And trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it. And if you do, then just shout it loud and clear. I wanna know if you really need it. And if you do, then just shout it loud and clear. Loud and clear. Loud and clear. Loud and clear. Shout it loud and clear. Loud and clear. Loud and clear. Loud and clear. Shout it loud and clear.
Hi everybody. Good evening. Good evening. Good evening. And all right, welcome to another edition of DayTradeSPY.com's Week in Review. And my name is Hugh, and I'm just fighting with my cat right now. She wants to come up here and be with me on the desk, and she's bothering me. Get lost, animal. All right. Okay. What's going on here? What's going on here? Wait, you stay there. Stay there and stop fighting with me. I'm gonna beat you up. Okay. All right. There we are. I see a lot of people still joining us here, folks. Come on in, gang. Lots of them right here in the front. And yeah, I like to have you all up in here. And I want to get everybody in here before we kind of get rolling here. So a couple of things just want to mention. I know sometimes I speak a little bit too fast if I get a little passionate about what we talk about. If that's the case, just let me know and I'll speak a little bit slower. And if there's anything technical that we're talking about here tonight, don't worry about it if you don't understand. All right, it's going to be nothing that relevant that you won't be able to get caught up on. Let me know if you are new on, if you've never been in the trading room here before, rather in this webinar. I'd like to just give you a big shout out, whatever. All right, James, hello from St. Louis. Hello, everybody. Okay. All right, so there. Okay. All right, let's get started. I think it's time. It's 8:01. I just got to find the right button. Right here we go. All right, here we go. All right, well, systems go, live streaming, we're all good. We're all good. Welcome to DayTradeSPY.com's Weekend Review, ladies and gentlemen. It's Sunday, June the 21st. Does that make, is today the first day of summer? It's Father's Day. Summer begins today. Wow. Happy Father's Day to all the fathers out there. And Summer Day, yes, first day of summer. And great to have it here. Sure hope the weather warms up a little bit more than what it's been here. And it's been a little on the chilly side for the last little while, but anyhow, we are good to go. All right, and there I am. My name is Hugh, and I'm in the dark. I think what I'm gonna do is I'm gonna close the shades back there, and at least bring them down a little bit so they can see me a little bit easier. That ambient light is what kind of kills it too. I'm just gonna turn it on for a second, see if you can see the sunset. Sunset's really nice back in here if you can see it, and I'm not sure you're gonna be able to see it or not, but I'll leave it like this for a little while. Maybe we'll be able to see the orange glow of the sunset. Hey, anybody see, was it Venus and Jupiter? I didn't get a chance to see it. I tried to see it the other day and a lot of clouds. I didn't get out there to see that. So uh, hopefully I'll be able to see it before it disappears if it's still around. Not really sure up to check on that. So, okay. Yeah, Mark from Houston. Good to have you here. We got Jenny from Manhattan. Good to have you online. We have Fred from Philly. Okay. Who else do we have online? Horst from Detroit. And a lot of people chiming in. Okay, cool. Let us know in the questions box, folks. Let us know in the questions box. Okay, here's what we're going to talk about here today. Talk about last week. Look at the upcoming week. And where did I go? Where did I go? Last week, upcoming week. Give you a little 2-minute tutorial. Oftentimes turns into 3 or 4 minutes, but we'll try and keep it at 2 minutes. Can answer your questions, folks. There's a questions box. You'll find the icon on your Zoom dashboard. Just click on that. And I'm the only one that sees that, so go ahead and say whatever you want. All right. Anyway, that's what we're doing here tonight. So, yeah, I'll have a little fun here tonight. And Phil, Las Vegas. Okay. Yeah. We also have, okay, Angie from Toronto. Good to have you on here. All right. Okay, folks, got to give you the disclaimer here. This is your regular standard default disclaimer. By attending this webinar, you fully understand and accept the financial risks involved in trading securities. The risk of loss can be substantial. You should carefully consider whether such trading is suitable for you in light of our personal investment objectives and financial resources. By accessing this webinar, you understand that you're not receiving any advice as to what or when to buy or sell, but are simply receiving information for educational purposes only. Any decisions concerning a trade are solely your own and meet your personal objectives and risk tolerances. You alone are responsible for all your own trading, and past performance does not guarantee future results. And I think you all know that. And that applies to just about everything out there. So, anyway, my name is Hugh. Why listen to me? I'll tell you why. Because I got lots of experience. Long time trader, publicly traded, teaching people, I should say, publicly teaching people since 2010. That puts us in our 17th year of doing this. It's funny because I remember when we first started doing this, actually it was by a fluke. People would ask me, "Oh, you just, can you just show us a little something?" Yeah, sure. And I can't remember the first client we had or whatever. I can't remember what her name was, but anyway, it just kind of grew, mushroomed and ballooned, and octopus just went out all over the place. And back in those days, it was actually insane. And we thought, oh, this will last a couple of weeks, maybe a month tops, and that'll be it. But no, here it is, 17 years later, we're still doing this. Some people might say we're doing something right. I like to think so. Anyway, really happy to be doing this all these years, and God willing, we able going to keep doing it, right? As long as you want us. Now, if you don't want us, that's fine. You don't have to join us, but this is what we do, and we enjoy it. All right, we enjoy it thoroughly. Anyway, I've been trading a long time. I've been trading a long time before that, and started making some pretty decent money. But the things I learned. Okay, I took a lot of courses back in the early days, but there's always something missing in those courses. I don't know if you ever took those other courses back in the day. And first of all, they're very expensive, and secondly, there's a lot of things they didn't teach you, probably because they didn't know or they didn't want you to know. I don't know, but the stuff I had learned came from the School of Hard Knocks. People say, "Where'd you go to school, Hugh? Where'd you go?" Well, formally, went to, wherever I went, but that doesn't matter because it's the School of Hard Knocks. This is where I learned the real stuff. You know, University of Buffalo teaches so much stuff, but I mean, but it's the School of Hard Knocks that where you really learn. And by that I mean that deep in the trenches trading, where if I do this, this is going to happen. If I don't do that, that's going to happen. So anyway, long story short, I started making some money on the market, but it was actually the losses. I think the losses that I learned most of my great information from the losses, because I used to keep a log and I still do. And whenever I had a bad trade, I was kind of go back and say, okay, what did I do wrong? What could I have done better? Did I jump the gun? Did I get out too early, get out too late? Did I not get in at the right time? Was the setup not right? Maybe the setup was right, but I didn't have enough room to grow into. Was I impatient? Was I not feeling well? Did I have an argument with somebody or something? There's always a reason I felt that I'd lost on the trade that I shouldn't have. Did I stay in too long? Did it fall under a level where I should have just bailed out? Because if the trade is no longer, see, if the trade is no longer valid, in other words, if at a certain time you would say, I would not get into this trade now, then maybe you shouldn't be in it. Maybe it's just best to cut loose and, other times, you should still stay in it because, well, it's going to probably bounce around and go back up, or if you got lots of time. And anyway, it's the lessons I learned from the losses that made me successful. Because if you stop doing those things that don't work, right? Stop doing those things that create your losses, then what's left? Just those things that do work, right? Those things that do work. And that's really the key. We all have to celebrate our wins, but it's those losses. You should never let a good loss. You should never lose a good loss. By that I mean always take away a lesson, especially from your losses. Anyway, that's what I say. Anyway, I learned some cool techniques from the trenches, and that's what I teach. Short-term breakout trades, multiple times a day. And why do I do this? I thrive on the success of other people. I thoroughly enjoy hearing the successes of other people when they chime in and says, I just made a couple thousand here. I made 6% there. those are the things I actually live for. I mean, I know how to trade. I can trade on my own. I don't need to do this, although it keeps me sharp, which I like. But I thoroughly enjoy seeing the success of other people. There's just something about that. You can't put your finger on it. So, and when you have all the things, the material things that you have that you need, you still have to have a reason to get up in the morning. Okay. You have to have a reason with which to get up and go to work, right? You have to have a reason. A lot of my friends are retired. And I've got some friends, I don't know, I'll be bored out of my mind. They get up every morning, they go golfing, and they come back, play pickleball, and hang out by the pool. The next day, get up, go golfing, come back, play pickleball, go to the pool. Next day, golf, pickleball, pool. Every day it's the same, and I'm thinking to myself, oh my Lord, hang me. But I don't know, to each his own. I'm not knocking it. I guess they get their challenge on the golf course. I don't understand it, but that's not something I do. But I guess that's what they do, and that's great. That's awesome. But for me, I could never do that. So I can never. I need other stimulation. So, and I love to hear the feedback from people, and that's kind of what keeps you going. So. All right, so that's my story, and that's why you should listen to me because I kind of learned a few things along the way. So I want to tell you about Spy in the Market. If you haven't yet subscribed to this, you really should. It's kind of an easy read. All you have to do is go to our website, DayTradeSPY.com, and register. Right when the pop-up comes up, wants your email address, just write in your email address, and every Thursday you are going to get our newsletter. I write the newsletter every Thursday, and it's just a very brief read, 2, 3 minutes. Very light, nothing overly heavy. It's not a big, long, drawn-out analysis of this or that. You don't have to have your calculator handy. Nothing like that. Very brief. Entertaining even. All right. Sometimes you'll see some, insights into my life, some insights into what we do, why we do what we do. And this week's topic is SPY remains the best exchange traded fund out there. Of the hundreds or maybe even thousands of ETFs out there, exchange traded funds, SPY, to me, in my mind, still remains the best. It's the stock that follows the S&P 500, the top 500 stocks on the market, which is really pretty cool because wherever the economy goes, that's where SPY goes. SPY follows the economy. So you don't have to do many in-depth analyses or anything like that. And I want to tell you, in the past, I kind of want to go back a little bit first, just step back. In the past, I used to be part of other trading rooms and groups and organizations, as I'm sure many people have. Just going to bring this up here, and before I get into the week's events. But what happened was we used to get together every Sunday night for a couple hours, maybe 3 hours, and then every day during the week, nine to four, we'd get together at 9 to 4. Yeah, it was 9 to 4. And then I think once or twice during the week as well, at night, we would get together. And there's a group of us, and we'd all be assigned our own sectors and companies and different things. And we'd have to look for to see where we anticipate the moves. Frankly, I don't think most of us, if any of us, really even knew what we're looking for. But I used to fake it all the time. Oh yeah, well, nothing in my sector, none of my companies, because number one, I didn't really know. Number two, if I knew, I didn't have the confidence with which to speak up on that because I wasn't really that sure where the stock's going to go, and I didn't really want people throwing money at something I wasn't really sure about. And number three was I just didn't want people blindly following what I was saying. I mean, how can you be sure where anything's going to go? How would I know on a Sunday where this particular trucking company is going to be on Wednesday or Thursday? That'd have been impossible. It'd just been might as well throw darts at a dartboard or something. I just never found that to be something that I would do. And you have to worry about sectors and all kinds of things and interest rates and the economy. I didn't find that it worked very well for me. Let's put it that way. Anyway, anyhow, that's kind of what happened. So when it left the group disbanded anyway. Which is just as well. That's what happened. So, and then I just kind of learned how to do this myself. And that's where I started. Anyway, this is a look at the week, folks. This is a look at the week, and I'm just going to pull this up right now. Just give me half a second while I grab my drink. Okay, I'm back. This is the way the week looked this last week. I kind of got Friday in here, but next last Monday, actually, what happened was they signed the peace treaty, right? They signed the big peace treaty, and SPY jumped over 1.7% as the broader market surged on easy inflation fears and falling oil prices, the optimism of the opening of the Strait of Hormuz. It was the fact that they had signed the peace treaty and that was very encouraging on everything. So, and excuse me, I sure wish I was holding calls back in that day, but I wasn't. The thing is, we kept hearing this talk about the peace treaty's coming and it's coming, it's coming, but you didn't really know when it was going to come. And when you buy options, you have this time component you really have to pay attention to. It's called theta loss, time loss, just by the very existence of these options. And if you really don't know what that time frame is, it could come back and bite you pretty good. Has happened to me actually on more than one occasion in the last few months. So I was always a little hesitant on holding options too much over weekends or overnights, but over weekends especially. So I did not have any options on overnight, and that's just fine because there's plenty of opportunities every day to make some money. Well, that was on Monday. On Tuesday, we got a slight pullback on the S&P 500 as the investors rotated out of the tech and chip sectors, but the markets were still buoyed, with the Dow gaining 0.6% to top 52,000 for the first time. That was pretty cool. On Wednesday, SPY tumbled 1.36%, driven by the Fed Reserve rate hike fears and Fed Chair Kevin Warsh's comments of potential monetary policy tightening. They had the uh, dot plot chart where the members they put a dot on where they think interest rates are going to be every quarter, and Warsh withheld from putting his dots on the plot. But it was pretty mixed. There's about half and half. Some people expected the markets or the interest rates to go up, others to go down. In the last few weeks, I've seen a lot of flip-flopping back and forth between interest rate reduction expectations and interest rate hike expectations as well. Well, that doesn't bode well for the market. The market does not like the uncertainty of it all. It likes certainty. It can handle good news, even bad news, but it's the uncertainty that it doesn't like. SPY rose. So anyway, what happened was SPY tumbled. Uh, totally came down on that day here when Warsh was talking. All right, because of the fears. And then, what's going on here? Well, let's go back to it. And then on Thursday, SPY rose. All right, found some pretty good support down around 741-ish. And then it rolls back 1.04% on the signing of the interim U.S.-Iran peace agreement, which eased Middle East tensions. We came back up to around 740, 748, settled in at 746.74. So that was good news. I think we're going to see some movement come back up, assuming that the peace treaty continues on. I kind of gave them 48 hours before they started throwing bombs at each other, but they haven't done that. So I'm a little kind of impressed. But yeah, we'll see. We'll see if it goes into next week, right? I'm sure somebody's going to lob a bomb over there just for good measure. Well, we got some spare bombs that we haven't used up yet, so let's just fire them off, and who knows? We'll see if we can get the enemy. Anyway, that's kind of what happened this last week. Here's a look at the seasonal charts, folks. Those not familiar, that blue line is where SPY is now. All right, SPY is the stock we follow, the S&P 500 Spider, SPY. And the red line is the average of the last 5 years daily close. All right, and when you take a look at what happened here from about a week ago, SPY slipped about 1 point, but historically, again, going back the last 5 years, SPY actually spiked a little bit, about 7 points going into the following week. All right, so what happened last week? The Fed Reserve kept interest rates the same, 3.5 to 3.75%, but tilted a little more hawkish with forward-looking projections. Officials remain divided on the next policy move. Rate cuts are no longer the base case. They're talking about a possible rate hike. They're going to see where inflation comes in and the labor market and see if they have to fight this inflation. If they see labor is pretty stable. They might go after that inflation number, trying to wrestle that back down to 2%. Many Fed members still see at least one rate increase this year. And while concerned about inflation, the Fed's not yet signaling the start of a renewed tightening cycle. So that's good. Markets, here's a chart. Markets are pricing in higher Fed funds rate compared to the Fed's projections. Up around that 4% here, market implied, but the projection is coming down a little bit here, 3.5, 3.75%. We'll see where that goes. Hopefully it'll come down, but again, it's all dependent on inflation. The Feds use PCE, personal consumption expenditure, as their primary guide. I've got core PCE inflation as well. They're riding high up there. The Fed's target is at 2%. If this inflation continues, you can be sure they are going to increase interest rates, and the market does not like that. If interest rates go up, stock market's going to come down. Now, there are other factors that are going to be considered before the market tanks. Certainly, one is the war. The other one is artificial intelligence. Artificial intelligence, that's the big one. That's the big driver these days. The money that's pouring into AI and AI chips, microprocessors, all that wonderful stuff, that is pushing markets higher and higher. And I'm not sure where the markets are going to go with all that. But here's a look at the weekly stats. S&P rose about 0.9% this week, up to 9.6% year to date. Following along, the DJIA, Dow Jones Industrial Average, ran up about a 1.4%, and the NASDAQ ran up 2.7% this week. To come back to year to date, Dow Jones 7.3%, and the NASDAQ up 14.1% year to date. Here's a look at what's coming up next week, folks. Next week, Monday, no news, no economic news. It's going to be mostly headline news. See what happens with the Middle East crisis. If there's no material news there, we might just see some range-bound trading. We'll see what happens. Tuesday, S&P Global Manufacturing PMI and also the S&P Global Services PMI, along with the Richmond Manufacturing Index. That's going to be released on Tuesday. New home sales Wednesday. Thursday, our usual unemployment claims. PCE is going to be released on Thursday, along with GDP price index and core durable goods orders. Also, we have personal spending and personal income. And on Friday, University of Michigan consumer sentiment, as well as their inflation expectations report as well. As far as volatility is concerned, I expect it to be low on Monday, high on Tuesday, slipping down to medium on Wednesday, high again on Thursday, medium on Friday. And whenever President Trump speaks, expect volatility to ramp up there as well, because we never really know what's going to talk about, right? Don't really know what's going to talk about. All right, moving along here. And one of the things I promised myself is I'm not gonna hold you ransom for for too much over an hour or anything. I was gonna joke around and say, I can stay here all night, but I gotta leave at 11:30. But I'm not gonna do that to you. So I understand the first day of summer and people still enjoying their barbecues tonight. Hope you enjoyed the long weekend, by the way. We had Juneteenth as a vacation day here. The markets are closed and didn't do any trading on Friday. It's sorry, choking on my water here. Okay, nice to get a day off actually once in a while. So anyway, here's our 2-minute tutorial. Can talk about a little bit about support and resistance. Just a little bit about it, especially for the new people who are not really familiar, because this is something that we do every morning. We identify support and resistance levels for our OMG strategy out of the morning gate. That's short, OMG, out of the morning gate. A little play on words these days. And I thought I'd tell you how we arrive at support and resistance. What is support and resistance anyway? A lot of people are really sort of confused. I get questions about them. Oh, how do you find this anyway? What do? You pull numbers out of the air? No, we don't. We never pull numbers out of the air. Support, that's the price level or zone. It doesn't actually have to be an exact price, but that's where a downward trend tends to pause due to a concentration of demand. That's where the buyers step in. All right, so the price is going to go down until it becomes attractive to buyers. Buyers say, you know what, that's a good price. I think I'm going to buy now. Just like anything else, right? Anything else. Excuse me. New car is released. Oh, that car is $65,000. And say, well, I'll just wait until they drop the price a little bit. You kind of keep an eye on it. So, well, when it hits 58, I'll buy it. And then when it hits 58, okay, I'm in. And it's pretty straightforward, right? And I can't think of a more pure capitalist thing to do and then trading, to complete supply and demand. Resistance, that's the opposite. This is where the price level or zone, that's where the uptrend tends to pause due to a concentration of supply. That's where the sellers start cashing out. So those people that bought low and the price goes up, they're saying, yeah, I made some pretty good money on this. I think I'm going to start selling. I'm going to start selling. And then sometimes when you're watching this, there's some key sellers. When you see a lot of volume coming in from, say, the managed funds, the the big boys, they start massive sell-off, then the others all fall in line. So, okay, well, we're watching where the big players are selling. We're going to sell when they sell. And then everybody comes on the bandwagon. There's a massive supply. Well, then there's a big sell-off, and that's where the price starts going down because they're not getting the price they want for it, right? It's like anything else. Real estate's a prime example as well, right? So that's where the sellers start cashing out. And again, these are zones. Zones. They're not exact lines, but markets are driven by crowd psychology. So these levels should be viewed more as general zones rather than exact specific dollar values. And this is why I advocate things like, okay, well, you see a line, maybe that resistance is up at, I'm just throwing a number out there, 753.20. 753.20. I just threw that number up there. 753.20. Well, maybe you might want to sell when it hits 753.15 or 753.17 or 18 because you're approaching that zone. And that's why oftentimes when you see a double top as an example, on the right side of the top, the right top, it doesn't go out to the same level as the left side because traders are watching that technical aspect of it, and they're saying, okay, well, I see that resistance at 753.20. Well, I'm going to start selling before it gets that high. So you get to the front of the line and make sure that I get my order in and I make sure it sells. So they start pushing their orders in at 753.15 or 16 or 17 or whatever. And then others fall into place. And so that second top, it might have been the first top might have been at 753.20. Well, that second top might just be at 753.15. And then it starts going down. So it's that zone area in there. So you got to really make sure you just keep an eye on that. Here's how traders use these support resistance lines, buying the bounce. Traders often buy near support level, anticipating the price is going to bounce up, and while placing a stop just below to manage risk. We don't advocate stop losses because you get stopped out a lot and different things. But we will look at a trade in the trading room, for example, and say, well, we ramped it up. We're trading in this range, but if it drops off into this one support level, then I'm going to just take my gains or my losses, whatever, cut my losses, or get into a short position, right? Hmm. You want to make sure that you're not in the move to the upside if you're dropping off a major support level, or if you are, you're understanding the risk and okay, that's got to come back up into that range and go higher to make any money. But if you're just looking for short-term trades, then you'll want to get out of it at that point. Excuse me. Shorting the ceiling. This is where traders frequently sell or they short their position near a resistance level with the anticipated price rejection. And they might just have a stop just above the ceiling. So if it goes, let's say they're in a short position, but the price keeps going higher and it breaks through that ceiling, okay, not good because now the price is probably going to continue higher. So I better cut my shorts early, right? Cut my put options early. For those of you who don't understand the terminology, if you're looking, so options have names. If you expect the market to go up, you buy a call option. If you expect the market to go down, you buy a put option. Call up, put down. Very easy to remember. And that's how traders use these zones, all right? That's how they do it. So, breakouts. Traders frequently, this is what I like to do. This is my primary strategy. I like to wait for those breakouts. And when I wait for that price to convincingly break through resistance, indicating a strong momentum to the upside, then I buy, expecting that upward trend to continue. That's what I like to do. That's my favorite strategy. Breakout trades, breakout trades. Roll reversal. If the price falls below a major support, that old floor, well, that becomes the new ceiling or resistance level. If the price rises above a major resistance level, that old ceiling now becomes the new floor support. You have to think of these support and resistance lines. You got to draw them in, right? Draw them in. And you got to draw them in, and don't. It's like a building, right? A tall office building or apartment building. The one floor's ceiling becomes the next floor's floor, and up it goes. That's exactly what it is. They say the market likes to take the elevator down and the stairs up. You see that a lot. So whenever there's a sell-off, usually it happens very quick and dirty, right? Quick and fast and furious. You'll see sell-offs, they happen fast. The market goes down real fast. But it tends to step its way up, gradually step its way up. Markets gravitate to the upside. If you just leave them alone, do not upset the market, it'll gravitate to the upside. Um, excuse me, various methods to calculate support and resistance. By the way, this is a 2-minute tutorial. It's not meant to be an overall in-depth training session. Okay, so that's why we're not showing you charts and stuff. But I like to look at it when two or more bodies close at the same prices on candlesticks. When two or more bodies close at the same price, that's considered to me a resistance or support level. Fibonacci levels. I know my cohort John Johnson. He loves Fibonacci. Um, he's a master at Fibonacci. I will put them on my charts from time to time, but I've not really mastered the Fibonacci's quite yet. I like to use the bodies, something a little more. I mean, it's just what you're used to, right? And that's kind of what. But John's he's an expert at Fibonacci. I like to use pivot points as well and trend chart patterns. I really love chart patterns. From a technical standpoint, chart patterns seem to really provide some very good foresight into where the stock may very well go. Of course, there are never any guarantees, and it doesn't always happen that way, but often you will see those chart patterns just rolling out the way you expect, and when you can anticipate that, and that's where we put in the yellow brick road. This is our prediction as to where the stock is going to go based on very good chart patterns. Now, one thing about chart patterns I want to tell you: don't try to find them. If they don't jump out at you in a very obvious way, okay, don't try to force a chart pattern. It has to kind of jump out at you. And if it does, the clearer the chart pattern, the better it's going to roll out and form. All right, don't try to find, well, I think it's going to go down here and go back. It has to really kind of jump off the page and say, oh my gosh, this is so obvious, right? It's got to be obvious. I also like to use exponential moving averages. I like the 10, 20, 50 EMAs, and you'll often find the price coming back down to test those EMAs and bounce off those either up or down. And now listen, when they converge, often when you see the EMAs converging, that offers you a much stronger support or resistance. And it makes sense because some people might be watching the 10 EMA, others the 20, and still others might be reacting to the 50 EMA. So when you get everybody, right, everybody's reacting to those and they converge, that's going to give you an almost sure level of support or resistance when they converge all together. When they're far apart, they're much easier to break through, so it doesn't have that same effect as if they converge with each other. All right, let's move along, ladies and gentlemen. 2026 goal. This is where we track all the trades in the trading room, having started in early January. If you were to have only purchased 5 contracts per trade, all trading room trades are recorded. This is where you would be today. We dipped down a little bit here a few days ago. We're at 27,000. We'd have been down at 25,020. I took some losses here this week. Not every day is going to be a winning day. Not every day is going to be a losing day. I mean, sometimes you're going to have some losses, and let's admit it, there's some losses here, and we had a loss here, right? A couple losses. So some pretty bad losses. I got that one, $1,850. Oh, that one hurt. That was painful. But anyway, still at 25,000. And if you think about it, here we are, middle of June. So I expect that we'll be at the over 50,000 by the end of the year if you just traded five contracts. Your average buy-in would have been about $4,000 a trade to get into each position, and that would have brought you into that. So you'd had a pretty good profit year to date. Folks, I want to know what your pain point is with trading. What is the pain point? Because I know that a lot, and put it in the questions box, all right? Put all your questions and answers in the questions box. I don't know, is it finding the right trading style? I'm going to go down and see this. Finding the right trading style. Is it looking for educational programs? Do they cost too much? Finding the right program that fits your style. By that I mean the trading style. Are you looking at day trading in and out? Are you looking at longer term position trading, swing trading? And here's the thing, trading has to fit. You have to trade the kind of uh, style that fits your capitalization, your risk tolerance, how much time you have available to trade. As an example, a lot of people might be working and they don't have time to sit in front of a computer all day, but they might have maybe half an hour or an hour in the morning or something. This is all part of that style. Is your trade point, your pain point managing risk? You find that you just can't seem to get out of a trade and you let it go to zero. Is there something else? Let me know in the questions box what your pain point is. And let's take a look here. Procrastination. Okay. Managing risk. Managing risk. Learning the trading platform, be it Tasty or other. So a lot of these platforms like Tasty, I'll be frank with you. Tasty, I just use their trading screens. There's a lot of information on Tasty as an example. I have no idea what they do. Like they get into some kind of weird stuff that I don't follow. And they're into, spreads and different things like that. But I like Tasty's platform because of their commission structure. Two things, commission structure, three things actually. The commission structure is awesome. You spend $1 to get into a position and zero to close a position, up to a maximum of $10. So if I'm trading 100 contracts, it's only costing me $10 plus a little bit for exchange fees. The other thing I like about Tasty is their speed of execution. It's instant. It's like right there, right there. Sometimes I even wonder, did I even push the button? How did it know? Did it know I was going to trade? I don't even think I pushed the button. It's already executed the trade. And of course, the third thing is their unbelievable customer service. You call them up, they answer the phone. They fix your problem. You don't have to go through craziness to get there. So you want to make sure that customer service is always there in case you ever need it. So I love Tasty for that reason. Same with Thinkorswim. Thinkorswim has, Schwab Thinkorswim has a lot of information on their platform that I don't even need. I don't use. I don't need to look at the various other screens. I only use their charts and trading the trading screen and maybe a couple of little things, but nothing major. So you don't have to know everything about a trading platform um, to use it. Okay, get comfortable with it. All right, finding the right program. Okay, managing risk. Okay, yeah, mostly it's finding the right program to fit your style. So I'm hoping that we can solve that issue for you. Because I mean, what we do is we day trade. So let me ask you another question here. We day trade options on SPY, and a lot of you know that already. I know there's a lot of new people online who might not know that, but that's what we do. We don't look at swing trades. Frankly, honestly, I have no idea where the market's going to be a week from now. These pundits that seem to be predicting that where the market's going to be a year, a month, or even a week from now, oh my gosh, I applaud you because I have no idea. And, and frankly, I don't think you do either. So, and those people, they don't know either. Nobody really knows. Would you know? Would you know that where the market's going to be a week from now that you'd invest all your money and thinking, oh, it's going to go up? No, maybe it will. Maybe it won't. Maybe it'll stay the same. We have no idea. And we're all headline-driven news these days, and we've got a leadership administration that thinks nothing of swinging in some tariffs here and let's solve a war there and start another one there. Oh, we don't like the leadership in Venezuela. Let's just go grab them. I'm not saying good or bad. I'm just saying that there's a lot of stuff going on here. And of course, it's all going to influence the market. So we have no idea where the market's going to be, but we have a pretty good idea where it's going to go today. Where it's going to go today, based on news, right? The underlying fundamentals, based on the news coming up, based on technical indicators. So we have a pretty good idea where it's going to go in the next couple of hours. So that's kind of what we do. And we just like to stack up those little gains little by little by little. And that's kind of where we're going with that. Doesn't always happen, as I mentioned earlier this tonight here, that this last week has been a bit of a struggle. In fact, we even pulled back a few bucks. But that's what that is. So, all right, let me ask you a question here, folks. I haven't found that fits my mentality. Yeah, you have to be aligned with the program, right? You have to be, and day trading does require a focus. I don't think, even though I've been doing this for a very long time, I don't think I could focus for what is it, about 6.5 hours a day. So what it is, 6.5, something like that, 5.5, 6 hours, whatever it is, 6 hours a day, 7 hours a day, whatever it is. What do we here? We start at 9:30, 10, 11, 12, 1, 2, 3:30. What's that? 6.5 hours plus the 15 minutes at the other end. I can't focus, 100% for 6.5 hours a day on trading. I'm only effective the most at the beginning of the day, which is probably why most of the profits are made at the beginning of the day, because that's where most people, they just go in the morning, make the money, get out, and then the market oftentimes just kind of floats along the rest of the day, unless there's a big event that's going to move it, right? But anyway, you do have to find something that you're well aligned with, and you're and something that you can actually handle, and be very comfortable with. That's very important. You have to be comfortable with whatever it is you're working with. Some people like to some people like to do swing trading. They don't want to watch it moment to moment, but they think that something's going to go up over time, and they'll buy that. In that case, probably you might want to just stay with the stock on that one, even though your profit, your gains are not going to be that great, but it's a little more stable perhaps. Because the thing with options is you have the state of value, right? You have volatility, you have all these different things affecting the option price, and it's a little bit tough. All right, I'm going to ask you folks, what are you willing to pay for a trading room when you have two professional coaches, real-time trading, teaching, answering your questions, and real-time interactivity? Bunch up in the questions box. I want to get an idea as to what you would pay for that. And I'm going to give you a second to think about that because, okay, there's some people. There's one I would pay up to $300 a week for good coaching. Okay, another one here. Another one up to $200 a week. Um, you know, I thinking about this back in the day when I learned this, I probably would have paid a lot of money for good, solid coaching from experts. In fact, I did, except it wasn't real time. Um, I had this one gentleman that I follow. I can't remember his name now. It doesn't matter. Yeah, punch up in the questions box, folks. What would you pay for some good quality coaching here? This one, this one coach. I don't know if you call him a coach, mentor, whatever you want to call him. He was okay. Gave the guy a lot of money, but he ended up he ended up getting run over by a tractor, a lawnmower. I don't know if it was a tractor, but it was a lawnmower. He was cutting some hill or something, and somehow got away from him, and he ended up getting run over by this lawnmower, and he ended up dying there. Um, anyway, oh yeah, well, whatever. Um, Folks, I'm going to put things in perspective. So what we do is we teach you our strategies. We teach you what works, what doesn't work. We narrate our trades. A lot of people are making more money than we are because it's difficult for us sometimes because we're actually talking about the trade instead of actually trading it. And when we trade it, our focus is diverted. But we teach you all the strategies, everything we teach you. And those people that have been with us a long time, they do very, very well with us. They do very well. And They, they've learned the methodologies, they've learned what to look for, what not to look for. They do very well. So the longer you're in the training room, the better. Now, I'm going to compare this to a college education. People say, and I strongly advise, yeah, make sure you get an education. I tell the kids, you got to have an education. You know, because you always need a backup. You need a backup, and you'll never get anywhere without a college education. But a four-year undergraduate degree, bachelor's, ranges from 26 to over 60,000 a year, depending on the school. That includes tuition fees, room board, books, whatnot. Folks, even more for private school. And you know what? There's no guarantee of a job. No guarantee of a job. I've known, many people, they get a degree, they get an MBA, and they start applying for work. Well, what am I going to do? Where am I going to, they get an interview. Well, they're lucky. They're one of the 300 people that got an interview or whatever, right? From the thousands that applied. Then if they're really, really lucky, they might actually get hired. And then the boss is going to tell them when to come in, when they can take their breaks, when they can go for coffee, whatever, what they want in their coffee. Folks, you know what? If you compare trading in our trading room and the education that we give you, there really is no comparison. There's no comparison. Um, I told my kids they got to learn this stuff because this is probably where they're going to make their money. But it's good to have a college education so you can fall back on and do what you want to do, based on whatever your interests are as far as that is concerned. But make sure that you do have something backed up, education-wise, but also learn how to trade. Because maybe one day that job that you got, you know what a job is, right? Job is an acronym. It means just over broke. Maybe that job is going to dry up. And maybe now with AI, right? Artificial intelligence, a lot of jobs are being eliminated because of AI. So you want to be able to still make money, support yourself and your family. Well, I can't think of a better way to support yourself and your family than trading options. Trading room folks, a few people said they were willing to pay under $100. Well, I'm going to tell you right now, how about $84 a week? Would that excite you? Would that excite you at all? Because we have our program here, our trading room. It's exactly what it is. Hosted by myself along with John. We're both professional traders. These are interactive sessions, learn and earn, fully narrated. This is where strategies come alive every day, 9:20 to 10:30 Eastern Time in the trading room. If you miss it, not a problem. Record it for later review. A lot of people are overseas. They might not have it. Some people are in Hawaii where it's like 3 o'clock in the morning, 3, 4 in the morning. So they tune it in later in the day when they get up. Folks, you can buy for the year, save some real money. It's only $24.95, or buy it quarterly. So that's $6.99 a quarter. You buy this by the quarter, it costs you $54. Actually, I think it's like $53.80 or something a week, which is nothing. For the education you get, are you kidding me? This is a steal. So you can click on this QR code. All right, click on the QR code for information on the trading room. This is actually the best deal, and if you know what calls and puts are, this is where you need to be. Don't try it. If you don't like it, not a problem, because you know why? Um, our programs are such that if it's not really for you, in 30 days you can just call up Eagle Financial Products and cancel. They'll give you the money back. It's a no-lose situation. And you hear me talking about this every Sunday night, but it's because I know what it is. I know it can help you. And if it can help you, and look at it this way, even if you learn a few key things, and that's what I learned along the way. I try and take a few key things away from everything that I do. All those courses I took in the early days and all that in the trenches trading that I done, all that wonderful stuff that I done, many years ago. Let me see. Well, if I do this, and this is the bad part of what happens, the ramifications of not looking at volatility as an example. All right. I never bothered with the Greeks. I remember in the early days, I would trade and I'd make some money. Sometimes I made a lot of money, and then other times I didn't make any money. And what happened between yesterday and today that changed? That yesterday this was a good trade, and today it's not a good trade. It's a very bad trade. And I remember somebody said to me, "Well, do you look at the Greeks at all?" I said, "No, I don't look at the Greeks." Well, maybe you should. That's what they said. Maybe you should. Thank you for that. Tell me about the Greeks. And they started telling me, data loss. I didn't realize this data. Oh, that's interesting. That's really good. Volatility. These are very important things to know. News items, different things that are going to be, required to assess in your determination whether this is a good trade or not. Anyway, you learn all that stuff, and that's what we teach you. And even if you walk away with a few good lessons in that, I think it's worth it. And again, if you don't like it, cancel. All right. Question. Are you going to give more information on the special thing you're going to do tomorrow, Monday? I don't know what you're talking about, Johnny. What are we going to do tomorrow, Monday? I have no idea. Um, Here's a question. Do you think SPY will be adversely affected when the SpaceX lockup period ends? The IPO day, investors unload their shares. That's a good question. So this was actually a situation that we were concerned about last week. SpaceX launched their, you like that pun, launched their IPO, went to the moon. We're wondering, are they going to take a lot of money from the S&P 500 and transfer, big sell-off and all these companies and move it all into SpaceX? Is this going to be new money? We also have the new SEC laws that eliminated the 25,000 day trade rule. So that should inspire other traders to come into the market here. Pardon my cat, she's just walking all over in front of me here. We didn't know, and I think that was one of the yeah, you gotta get out of the way, Rat. That was one of the issues where I kind of lost a little bit of money. I was a little nervous about that happening. So I remember being in trades and looking to exit a position because I thought the market might turn against me in a big way if that happens, and if I'm in this S&P 500 trade and all the money starts moving from the S&P over to SpaceX, that could have an adverse effect. But I don't think that happened. Now, I'm not sure where all that money came from, but I think over time that allocation had developed, so it wasn't a major effect on the S&P 500. That reason. Now, at some point, traders might want to sell their the shares they bought in SpaceX. I don't know how long they have to wait or whatever, but I do know that IPOs you have to be careful with. If you're looking for a long-term investment, be very careful. In fact, this was the subject of my last newsletter about IPOs and how most IPOs, if you hold on to them for a year, they actually lose money and a lot. They're a lot. So an IPO like SpaceX now, SpaceX could be different, but if it's like anything else, you're probably looking at the long, long haul. Okay. Now I know SpaceX is going to be involved in other things, robotics and different things, but anyway, so I'm not sure if that, Mark, in answer to your question, if that is going to adversely affect when that happens. But we'll wait and see. We'll watch it out. So see what happens. All right. Okay. Where do you think the market's going to go tomorrow, Monday? Dave, I don't generally know where the market's going to go. Um, and and frankly, I don't really care at this point because I'm not holding any positions. But and I hope you're not either, because if you held over a position over the long weekend, you'll have lost some theta value on your call options if that's what you're holding, or put options, doesn't matter which one would. So anyway, the point is we look at the we look at what is wrong with you, rat? We I call her rat. We look at fundamentals, the news. Tomorrow, everything could change. They could start bombing each other in the morning, and Trump's going to step in. Okay, kids, go to your corners, as he's done. Who knows what's going to happen tomorrow? The news is going to come out. Of course, it comes out earlier on that side of the world, and when we see it, there's a lot of stuff's already happened. And of course, we'll be looking at fundamentals. But I know that tomorrow is an economic news calendar. There's no high impact news schedule, so we'll wait and see what happens. Anyway, let me see if there's any other questions. Okay, is the beach picture in the background? I don't know where the beach picture is from. There, you get a little action on the water there. It could be from anywhere. I just picked it up from somewhere. Folks, let's have a little contest here. Let's pick up. Listen, here's what I want you to do. Pick a number from 1 to 100, and I'm going to give you about 20 seconds to punch it up in the questions box. And the winner, closest, the person closest to the number, gets the free ebook, Triumphs and Tragedies. And just do that. I'll give you some time here to do that. All right. Okay. And okay, other words, I just pull up my question. Okay, I'm gonna pull. Here's the number generated. Let's see what it. All right, there it is, right there. Pick a number between 100. Pull it up in the questions box. All right, and let me get all the numbers. Oh, wow. Okay, cool. And here's the random. That's not the number, folks. Don't get excited. I think that was last week's number. That's not the number. Person closest. And if there's a tie, you both get the ebook. Triumphs and Tragedies. Okay, 5, 4, 3, 2, 1. Okay, I got everybody's number. Okay, all right, we're cutting it off right now. All right, now I'm gonna get the number here. Let me see. I just have to click over here. And the number is 321 23. 23 is the number. Let's see who came closest to the number 23. All right. All right. Arnold P came in at 21. So far, he is the winner. Arnold P came at 21. And Arnold P is the winner. Congratulations, Arnold. I will send you the ebook shortly. Congratulations. All right. That's really pretty cool. Okay, folks, gonna wrap it up here. Call it a night. And let me get rid of this. How do I get rid of this? Okay, hit this button right here. And now I just have to queue up the song and yeah, we have other programs. There's another question. You have other programs as well. You want to talk a few words about those? Um, okay, so you've got the inner circle. This is where you get an emailed report every morning about 9 o'clock as to where we see the markets going. You also get a follow-up report, and you'll be invited to our Wednesday night meetup. We can ask John. He hosts this every Wednesday night. You can ask him whatever you want, and he stays right with you. Discusses the events of the day. We've got a couple alert systems. DayTradeSPY Signal, pick of the day. Just again, get these QR codes, and they give you a lot of information, including how to subscribe. They're all excellent, excellent programs with tremendous success. And of course, the trading room, and it's all there. All right, folks, if you have any questions, let us know, and I'll love to answer them for you. And let me just make sure we got everybody's questions in here. Okay. All right, great. Have a good week, folks. We'll see you. We'll see you the next time. All right, been a pleasure.
Now you're the one, shine brighter than the moon and the sun. Be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be